Sullivan. I'm a former IRS agent and teaching instructor with the IRS. Welcome to my YouTube station. It's the home of the 5-minute or less video. I am a national expert in IRS resolution matters. I've worked at IRS for a decade. I've been in IRS private practice for 40 years. I've represented and worked thousands and thousands of cases. I was not only a teaching instructor, I was an on-the-job instructor, did everything you could. I was a veteran and awarded revenue officer. Many of you have come to me because you've seen me on the national news. I appreciate you. You can see me in a coat and tie and what I look like on the national news. And you can, more important, see my team of former IRS agents at 777irs.com. I always give you these sometimes public service just with truth and inside information so you know how IRS in fact works the case. We do representation, obviously, we do it very well, but I try to give you tips ahead of time in case you want to work your own case or you want to hire someone. At least you're going to have a good guide or a good plumb line to go ahead and make decisions. One of the most important aspects of the revenue officer job is to make a decision. So IRS spends a lot of time teaching the financial analysis of cases. And the financial analysis of cases are really centered around the mainstay of revenue officer work, and that's analyzing the 433A, which is the individual financial statement, and the 433B, the business financial statement. It probably takes a revenue officer about 6 months, being very skilled to look at these, to dig down deep. You should know that one of the things the revenue officers do is they look for the stink on the cases. That is, they look for the areas that do not make sense. So the revenue officer is very skilled and trained on seeing what smells on the case. And as you're flipping through the pages on a 433A or a 433B, you know exactly where the stink is. And you know, if you're a practitioner and you're going to go ahead and contact the revenue officer, you want to announce these kind of really fast, that you're aware of these, and you want to smooth those out. So many times you try to disguise something, it's not going to work because the revenue officer has worked thousands or hundreds and thousands of cases and they know exactly where to look. So let's look at the 433A, which is the personal financial statement. The IRS, first of all, is going to look at the first page, make sure the dependents are all absolutely correct. They match up with the tax return. They're going to go down a little further. If there's an older person, they may want to say, how old are your parents? Are your parents about ready to die? Are you a beneficiary? Are you a fiduciary? Are you going to be on a trust? Or do you have any money coming? A seasoned revenue officer will go after that. As they go through the form, they're going to find out if they have real property. If they do, they're going to check Zillow or Realtor.com and look at the courthouse records. And they are going to go ahead and do some due diligence to make sure the property that they've listed on there is fair and correct. As they go through the form, they're going to be looking at vehicles to make sure that you've listed the number of vehicles. They have checked on DMV to make sure you're accurate, and they want to make sure your values are correct. IRS is basically looking at two things on the financial statement. They're really looking at your assets and liquidity and what you have built up, and most importantly, I'm going to get back to the most important thing, and that's the IRS income analysis that they're going to make. IRS is going to look very carefully at the income to the expenses. I've covered a little of this before, but IRS has what's called a national standards test, where IRS is not going to allow you to dictate what you want to spend for food and clothing, housing and utilities, for car payments, and how much you spend on your car. IRS is going to dictate that to you. They have a standard that they use that was set or put in place by the Department of Labor. And when they put that in place, it dictates what IRS is going to allow you to spend. If you're saying that you need $6,000 a month to live and IRS says you only need $5,000, there's another $1,000 going to IRS a month that you weren't expecting. So it's very prudent for everyone to understand the National Standards Program, because IRS is going to apply it on every single case, and they do so over and over for the offer and compromise. Looking now to the business financial statement, IRS pretty much is going to do the same thing. They're going to go ahead and look at the asset and the asset base. They're going to go ahead and try to discover what the asset values are to see if any of those are going to be liquidated. They're going to look at receivables, see if they can possibly levy them. And most importantly, they're going to look at the income and expenses. They want to make sure the expenses are reasonable, that the officers are not taking too much money, and everything is pretty much truly what it needs to be. If the revenue officers find there's excessive spending, the IRS is going to ask those people to go ahead and cut down their expenses and start making payments to IRS. So that's how IRS is going to work their financial statement. It's very important that when IRS is looking at this, they're going to want to make sure all your tax returns are filed, that you're making current estimate payments, and you're making current federal tax deposits. So as a practitioner, your first job is to get your financial statement immediately, know what IRS is going to look at, try to fix the financial statement up a little bit if you can, to make sure that statement is presentable, that you'll have all the documentation, all the tax returns are filed, and then you can move forward with the revenue officer. The financial statement, the 433 and A and B are the mainstay of the IRS collection work, and they're very important as a practitioner that you go ahead and monitor. If you're the taxpayer, make sure you package up that statement tight so IRS can look at it and accept it, and you'll be able to close it in the fashion you want. I gave you all the information you need today. Give me a subscription, because I really pour my heart in. Subscriptions are important because it moves me up the ladder for YouTube, and I do try to give you the information, and they're very important for me. Thank you for listening today.